If governments wanted to slow down the adoption of Bitcoin, they could spend less and go back on a gold standard. It wouldn't kill it and Bitcoin would still win, but probably slower. So the pace at which this is evolving is entirely driven by the destruction of the currency and the debasement of the currency. And I think Bitcoin is literally the antithesis of fiat. It's the best expression. If you want to see how bad fiat really is, pull up a Bitcoin chart. Don't look at the CPI.
As Bitcoin's price continues to surge, it's capturing global attention as more than just a speculative asset. It's becoming a cornerstone for those seeking financial stability in uncertain times. With each price jump, Bitcoin's role as a hedge against economic instability grows clearer, prompting even more individuals and institutions to take notice. What's driving this rally? At the core, it's a combination of increased demand, limited supply, and widespread distrust in traditional financial systems. In a powerful interview with Dylan LeClaire, Jack Mallers explores how Bitcoin is not just riding a wave of popularity, but is fundamentally reshaping the financial landscape. As the price of Bitcoin rises, its position as a revolutionary form of money becomes more entrenched. Unlike fiat currencies, which are susceptible to inflationary pressures due to unlimited printing, Bitcoin's capped supply of 21 million coins ensures its scarcity, further driving its value upward. This scarcity is becoming a key factor as more people flock to Bitcoin, recognizing it as a store of value that holds up even in the face of government-driven monetary instability. To hear more about Jack Mallers' perspective and his conversation with Dylan LeClaire, watch clips from the interview linked below. Don't forget to like this video, subscribe to our channel, and turn on notifications for more in-depth content on the future of finance. Enjoy the video.
I think of Bitcoin as money, and money being the market good that you acquire to save and exchange your time, your energy, your effort, your labor, right? So a cheeseburger is also a market good. An airplane is a market good. You get on the airplane to travel. You consume the cheese, or you acquire the cheeseburger to consume it. You acquire the money to store it and exchange it later. It's the technology we use to take our effort today and bring it to tomorrow. And so that's what Bitcoin is, plain and simple. That's a technology that all humans need, both on Wall Street and those that are at the cypherpunk manifestos in San Francisco. So it's permissionless money, so no one's allowed to tell anyone they can't use it. And so my expectation is if you are a human being and you need to store your time and energy and you need to save and exchange it for things, that you're naturally going to use Bitcoin. So I think it's inevitable in that respect. I also think for those that feel threatened by Wall Street, there's a very nuanced, we should be thankful for Satoshi Nakamoto for all sorts of reasons. One of the more impressive, in my opinion, is how Satoshi launched Bitcoin. I'll say it that way. In that Satoshi Nakamoto did not take Bitcoin to Goldman Sachs to take it public. Satoshi Nakamoto did not list it on the New York Stock Exchange. Satoshi Nakamoto didn't put it on Product Hunt. Put it on an email list and just leaked it. And for that reason, Bitcoin is owned by all of us, by the people. So over half of the gold supply is owned by governments and central banks. I think governments own only 4% of the Bitcoin supply. You've got Michael Saylor, who's borrowing as much money as a human being could possibly borrow. This guy's got billions of dollars of debt, and he's trying to own as much Bitcoin as he can, and he's barely eclipsed only 1%. And so the mere fact that Bitcoin is not concentrated, if Satoshi said, hey, Goldman Sachs, I created a really interesting money, I want you guys to help me take it public, we'd probably have a more concentrated supply. It's the fact that you can custody it in your brain. It's weightless. There's no cost to store and hold it. It's global. And the distribution was through mining, through energy, and through leaking it on a mailing list. There is no threat. I mean, Larry Fink can try his gosh darn hardest and maybe get 5-10% or something, not nearly enough to matter. I mean, you need to own majority of an asset class to manipulate it, to price suppress it. So the fact that we all have it, Satoshi, I think that genius is lost on many, is that we were able to distribute Bitcoin to the people in a sufficient way, which protects us. Sure, Wall Street wants to buy it. Welcome to the party.
Jack Mallers views Bitcoin as a revolutionary form of money designed to store and exchange time, energy, and effort. Unlike traditional assets, Bitcoin operates as a universal, permissionless technology, accessible without central authority approval, ensuring both security and privacy. He praises Satoshi Nakamoto's decentralized launch, which empowered ordinary people and prevented central banks or corporations from monopolizing it. Unlike gold, which is largely controlled by governments, Mallers sees Bitcoin as a defense against currency debasement, accelerating an adoption as governments devalue their currencies. While reducing government spending or returning to the gold standard could slow its growth, Mallers argues that Bitcoin's momentum is unstoppable. He points to El Salvador's adoption of Bitcoin as a pivotal step in separating money from state control and believes the US could follow, further legitimizing Bitcoin on a global scale. Let's go back to the interview and watch more clips to gain insights from Jack Mallers' discussion.
I think Bitcoin's the best expression of currency debasement. Bitcoin equals technology plus fiat liquidity. So I think a lot of the growth is driven by the destruction of fiat, is the level of deficits and the debt spiral that I think we're probably already in. So I think that's the net catalyst, the overall catalyst. If governments wanted to slow down the adoption of Bitcoin, they could spend less and go back on a gold standard. It wouldn't kill it, and Bitcoin would still win, but probably slower. So the pace at which this is evolving is entirely driven by the destruction of the currency and the debasement of the currency. And I think Bitcoin is literally the antithesis of fiat. It's the best expression. If you want to see how bad fiat really is, pull up a Bitcoin chart. Don't look at the CPI. So that's like on net. What I think about it, what I think is interesting about America, with El Salvador, it was a huge deal that a nation state, that a country removed their relationship with the people of money. It's literally the separation of money and the state, and which is why I think a lot of us in this room are interested in Bitcoin. And really, at the end of the day, money is our time and energy in an abstracted form. I talk about it's human effort, it's labor. Like, we all get up, we do stuff, and in return for that, we get money. So by proxy, when a government debases our currency, they're debasing you. Not the money itself, but like all your effort, all your time, all your energy. Money, in theory, should represent your contributions to society in like a perfect system. And so the fact that El Salvador said, we don't want to have an influence on that relationship, we don't want to be a part of that relationship, we want that relationship to be up to the free market. Because when the US government debases the dollar, they're debasing me and all the time, energy, effort, and labor that I've put into my life in acquiring these dollars. So the fact that El Salvador did that, that's why it was a monumental step. But they didn't have the ability to print their own currency. They lost their own currency in their own civil war. They were on the dollar. And so I think the next big step would be if a government that has the ability to print and debase and uses a central bank to manipulate and control and influence the time, energy, effort, and labor of the populace and of society, if a government that has that power is able to buy Bitcoin and acknowledge it, not even the legal tender part, just acknowledge it, own it, and validate it, that would be a huge deal. And I actually think the United States of America is probably in the best position to do that, and where I think they're the most likely candidate because they have the world reserve currency. Like, the U.S. is like, we're broke. Like, we just issued debt. Like, we're, being the world reserve currency implies that we run these massive deficits and we issue all of this debt, right? And so we are the most incentivized to actually start backing our future promises with something real. So I told, my chief of staff is somewhere in the audience. I told him, like, after El Salvador, people would ask me, what's the next? Is it, Guatemala, Argentina? Everyone was like looking on a map, looking through Latin America. I said, it might be the United States. Bitcoin's very American. And the United States, in theory, is technology, innovation, inclusion, equality. Every node on the network is treated equal. You can come and go as you please. So maybe I'm manifesting a little bit. Maybe this is less of a prediction, more of a hope. But I think that would be a really big deal. And as big of a deal as El Salvador was, the next step would be a government that actually can print their money and debase the populace through money printing. If they were to say this Bitcoin thing's legit and we should have some, I think that'd be massive.
Meanwhile, Bitcoin has struggled to surpass the $66,000 mark since July 31st, despite a brief 5.2% gain in early October. Analysts suggest that while the growing U.S. federal debt supports Bitcoin's long-term prospects, it has minimal short-term impact. Instead, socio-political uncertainties, including the Middle East conflict, the upcoming U.S. elections, and global economic concerns, have prevented Bitcoin's upward momentum. Despite a global monetary base increase and positive developments in stock markets like Hong Kong's index and the S&P 500, Bitcoin remains pinned below $64,000. The US dollar has strengthened, showing investors' preference for traditional currencies. Additionally, strong US macroeconomic data, such as September's job report, diminished recession fears and reduced the probability of an interest rate cut, pushing investors towards stocks and cash positions. Bitcoin derivatives metrics reveal neutral trader sentiment, with Bitcoin futures showing an 8% annualized premium. However, recent Bitcoin ETF outflows, 335 million since October 1st, indicate cautious investor behavior, further contributing to Bitcoin's stagnation. Despite some optimism about future Bitcoin price gains, the current macroeconomic environment and investor sentiment heavily favor the stock market and cash options over Bitcoin. As we wrap up, what do you think about Bitcoin's role in the future of global finance? Can it truly serve as a defense against currency debasement and offer financial sovereignty in a world dominated by fiat money? Please share your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching, and don't forget to subscribe.